Tesla shares looking to extend 4 consecutive days of gains. The EV maker, however, having a tough start to the year, we know. First quarter earnings disappointing the street, as sales are also seeing a drop. But our next guest highlighting that $300 level for Tesla may be back in play. Barron's associate Al Root joining us now to discuss. Al, always good to see you on set.
Hi, guys.
So let's talk about, first of all, that level, 300. Why are we watching that line in the sand?
Well, this goes to, with Tesla especially, I like to look at the stock charts as well as the fundamentals, because you sort of need all hands on deck when looking at this one, right? And, through the election, we went to 490 and then we went all the way back down to 220. We got basically through the 100-day moving average today, or maybe it was the 200-day. And then, 300, that puts 300 in play, and then sort of the next resistance would be 360. And why do we talk about this? Market technicians aren't necessarily looking at making fundamental calls on Tesla stock. But when you deal with a stock like Tesla, and you think, oh, it's 90 times earnings, the rest of the Mag 7, oh, the quarter wasn't very good, oh, Elon's coming back, and you're trying to put this all together, what the reaction can be, the stock charts are very helpful. So once we closed above 280 on Friday, I mean, you're looking at 300, you're looking at 360 in this sort of snapback in, oh goodness, things aren't as bad as I feared sentiment.
And what is the sentiment around Tesla generally? Because after the earnings, even though he said he's coming back, like we all know that the first quarter was pretty bad, and it doesn't, the early indications are not that there's going to be a big bounce in sales, for example. First quarter was terrible,
right? So, the regulatory credits, we like to pick on these, $525 million. It was more than operating profit, so the regulatory credit sales accounted for more than 100%. That was the first time since the second quarter of 2020 that has happened. So the car business is really tough. We all know the story, 337,000 deliveries. Is it Elon? Is it brand damage? Is it the Model Y changeover? So we are expecting, the street is expecting, 410,000 deliveries for Q2, so an improvement. Tesla, famously abandoned their goal to grow sales in 25 in that first quarter report. But Elon coming back, and he didn't fully come back, but 1 to 2 days in Washington with more focus on Tesla, you can see what impact that has. We've all heard the line, Tesla is Elon and Elon is Tesla. So it's like the savior is coming home for at least part of the week. So now we're going to do the robo-taxis in June. If he does that, again, that helps sentiment. And if they launch a legitimate new model this year that frankly isn't sort of a cheaper version of the 300Y, that's another positive. That'll help sentiment. So we're just sort of riding waves of sentiment at this moment, but we're improving.
If we get that more relatively affordable model, what would you expect demand to be like for that model? How would it sort of compare and contrast with the competition?
Well, two answers. So if it's a legitimately new model, and so I think that the street and investors think it's some sort of derivative off the Cybercab, something smaller, $30,000, maybe before the tax credits, which are still in place. I think the demand would be very good. It would be a full new market segment, right? So you would be looking at, you could sell hundreds of thousands of these in the US, and you could sell multiples of that globally, be a really good car. Because Tesla doesn't address all of the automotive market, right? You talk about Chinese competition and what's been happening to market share. They don't play in most of the market, right? They have no smaller car. If it's just let's just say it's a Model Y, but we have cloth seats and no leather seats, no seat heaters, and there you go, it's $30,000. I don't think that would be very good at all for the stock. I think that would start to shift sentiment because it cannibalizes sales. I am an example of this. As soon as they offered a cheapo rear-wheel drive long-range Model Y, I jumped on that because I couldn't get the big one. Sorry.
Right, well, and people kept telling us last week, don't wait for that, just buy a used Tesla because they're being marked way down right now instead of waiting for this mythical, cheaper model that's coming out. I'm going to call an audible, Al, and ask you, because we've all been covering this craziness over the past couple of months now in markets. And as somebody who's been doing this, we've all been doing this a long time, how are you surfing through? What's been sort of the most interesting thread for you to pull on as this has all been going on?
So the most interesting thread, tariffs dominate everything almost, right? We're talking about cars. There's a number of things, right? And I suppose you could extend this to defense, and I'll use the word chaos. It's just so chaotic The best example, or one of my favorite stories this year, is this idea of, well, if profits are going to, we talked about 25% tariffs, and this is peak tariffs, like our last guest said, but we have reciprocal tariffs, we have sectoral tariffs, we have Section 232 on steel and aluminum, we have fentanyl tariffs. So is it peak everything? Are we going to keep the sectoral tariffs? Are we going to cut those? Are we going to make deals? So the level of uncertainty is unprecedented, and what Wall Street is basically doing is giving up. And they're basically doing the bull, bear, and base cases, right? So we can now be right in any scenario. Well, yes, we tanked the economy, and we had that in a report. Or, oh, yes, it didn't turn out this badly, and now we should all own this stock. So they're really stepping back and basically waiting for the companies to sort of hold their hands. Analysts always like to have their hands held. It's a little bit different than what I've experienced in the past. So the level of uncertainty is unprecedented. You use these words all the time. But it's just crazy out there. No one really knows what to expect. And so I'll get an email just to finish the story, and they'll say wow, UBS says automotive profits will go to zero in a worst case scenario. Why are you still recommending these stocks? And the answer is nobody wants to downgrade General Motors ahead of earnings. It's going to be a disaster. And then on Wednesday morning, Scott Bessent says, you know what, sectoral tariffs are gone. Mm-hmm. Because then you just look like an idiot. So everybody's sort of well, I guess we just wait to see what happens.
Well, we've seen a lot of disclaimers in analyst reports where they say, this is true at this particular moment in time. I've seen a lot of those disclaimers pop up. Things could change in an hour. Things could change by the time this report comes out.
Yeah,
people are hedging a lot.
So we have this conversation in the newsroom, just to interrupt you, okay, so the parts tariffs are supposed to come on Saturday, May 3rd. So well, when are we going to preview the impact? Do we wait till Friday or do we do it tomorrow after earnings? Because probably will be invalid by Thursday afternoon.
Yeah, this is a little slice of our world, Al. Thank you so much for joining us. It's always good to see you.
Thanks.
Appreciate it.